Hey everyone, Major Tom here. I don't have a whole lot of time, but I wanted to bring this up, and I'm bringing it up because of the whole Fed talk yesterday and everything. Look, the Fed doesn't really care about inflation. What the Fed cares about is tightening. The Fed is trying to get the wages back to levels that make sense. They're trying to um, scare the housing market back to acceptable levels for the middle class to buy at. There's a lot of things that the Fed is trying to accomplish here. Inflation's not the only thing that's driving them to increase interest rates. Now, I kind of stopped making videos, as you've known, and I stopped making videos because it was consuming too much of my time with the baby on the way and with my project management stuff kicking more into the fold, running my own projects. I don't have that kind of time anymore. However, I have not been dormant. I've been working on some new stuff. Wanted to share a little bit of that. All right. So over here is a sheet that has a JSON code script that runs in the background. And every single day, 3 times a day, it updates from highest to lowest on the stocks that make the least amount of sense at the current price levels. This list is purely fundamental. And as you can tell, it's calls and puts, but right now it's mostly puts, right? Now, I'll give you an example of how this works. Carnival's at the top of the list. So I'll pull up Carnival stock. And the way this works is Carnival's last earnings was, let me just make myself disappear here. Carnival's last earnings over here was up here. Their future earnings is down here, so they're doing worse as a company, so their price should be lower, right? In a fair market system, that's what's supposed to happen. So their price at the last earnings was around $7.75, maybe $7.50, and current price from that point is, I'll just say it was here, about somewhere between 25 and 35% up, right? Away from that line. It doesn't make sense for Carnival to be worth more than they were last earnings with projected to do worse forecasts. Does that make sense? So that's kind of what the screener finds for us, and we take those differences or deviations in price and we exploit them. So for example, right now we are in Carnival puts extending past 21 December. I personally have January 20s, and we're just holding them. The price is going to have to come down. Right now, the implied volatility is not that high, and when it gets around earnings, the price is going to gap. Look what happened in the last earnings. See right here? Massive price gap. Came all the way down from 9 all the way down to 710. Now, the price could move before earnings, it could move on earnings, it could move after earnings. So that's why we always just play it safe. We buy leaps. I like to capture a month after the earnings report. So when looking at these, sometimes it's nice to see when the days till its next earnings report is. That way you pay for less data. But hey, if you don't know how to trade options, this is not me telling you to go trade options, but there's companies like Nike who are struggling with inventory issues where they're overstocked on inventory. They're probably going to have to take that as a loss going into next quarter, as we can see here. And their stock shouldn't be worth more than it's worth right now, right? Back then at last earnings, it was worth $83. Why is it worth $106 right now? It should be worth less than $83 because they're projected to do worse, make less money, right? Now, same way we play puts, you can play calls. For example, Robinhood is projected to do better, but the stock is being beaten up below this level up here. Stock's beaten up close to 21%, right? That there's a lot of profit to be made in just swinging these. And I like it because I don't have to stress every day at work. I just check on it like once a day. It doesn't even have to be during the trading day. I can just check on it and just watch stuff play out. Even if you're not making the trades, just watch stuff happen, right? So our top three right now, we have Carnival for puts, Nike for puts, Robinhood for calls. I believe this is a Loca Corporation for puts. Those are the top four. Um, so just keep an eye on this stuff. I think you'll be pleasantly surprised on how ETF rebalancing and how banks trade. All right. Have a good day, everybody, and stay safe out there. See ya.